We're now looking at the SPY ETF, which is basically the S&P 500, and we can see that it's at all-time highs right now, and it's above the 200 simple moving average, and the trend seems to be very bullish, but also expensive. If we look here, for example, at the PE ratio, we see it's now at 29.83, while the mean and median is around 16.15, which tells us that many stocks within the S&P 500 are a bit expensive right now. But today we're going to find the top 5 undervalued stocks. I divided them in 5 sectors. So for each sector I choose one stock that I believe is very undervalued at the moment. So the first stock we're going to talk about is in the technology sector. I believe this is one of the most undervalued and strongest business out there. So I choose for this sector Google, Alphabet. I believe that this is one of the most undervalued businesses with a massive potential upside. And one of the reasons is that its economic mode is actually really, really strong. If we look here, for example, we can see that it's a 9 out of 10. Their strengths are search engine dominance, YouTube monopoly, Android ecosystem, and massive data advantage. But the risks are regulatory challenges, privacy concerns, and competition in cloud services. But overall, I think this is a very strong business. If we look at its true value per share, we can calculate it in based on a discounted cash flow method, based on Warren Buffett's owner's earnings, and you can find it by net income plus depreciation amortization plus other non-cash items minus capital expenditure. And if we fill everything in and we only use a 10% growth rate with an 8% discount rate, we find out that it's undervalued by over 42%, which means that this stock is pretty cheap. If we look here at the charts, we can see that we look at weekly charts and we can see that it's in a strong uptrend because the economic mode is good. That's why it's always like in an uptrend. And this is a very healthy chart. Year to date, it's minus 5%, something like that. And I believe there is still a lot of upside for this business in particular. So let's go to the next sector, the financial tech sector. This stock is a payment disruptor and is a high growth fintech with a global expansion. And I think this stock has been through a lot of bad stuff, and it's now a little bit recovering, and it's super undervalued right now. So this stock is PayPal. And PayPal doesn't have the strongest economic mode. We can look it up. It has a narrow mode. And what that means, it's a 6 out of 10. So an economic mode is basically what protects it from the competitors going in. So they have a lot of competitors, but they do have a little bit of brand recognition, like their name. You can switch to others, but it's still easier to stick with PayPal. But you can switch. It's not too strong, and that makes this stock for a long-term investment a little bit more risky. If we look at true value per share, I filled everything in the same calculator. I just only use 11% for growth rate. And we can see that it's undervalued by 58%, so an potential upside of 143% with a true value per share of $171. If we look here at the charts, we can see that it's now trading at $71 here. It's still below the 200 simple moving average, but and I think it can go to 175, like from here. We can get like this 140, but I think this stock can bounce to like $200, like here or something, or 220. And once it gets overvalued, you need to get out again. So I will not hold this stock forever, but once it gets overvalued, I will sell at least 50% or maybe everything. But this stock definitely is a undervalued stock that gives a potential for a good risk reward. So the third business we're going to talk about is in the e-commerce sector. And it's one of the largest e-commerce businesses when it comes to gross merchandise value. And this business is, of course, Alibaba, ticker symbol BABA on the New York Stock Exchange. And if we look here, for example, we can look at the PE ratio of Alibaba, and we can see that it's close to all-time lows at 14.46. If we look here, it's 16.31, 23.48. So we can see based on the last years, 10 years or something, it's pretty much all-time low, the PE ratio, and we see the price climb and earnings per share also climb. So means that the business is relative cheap. And if we look here at the charts, we can see, so this is in the last 5 years, we can see that the stock has declined, but the revenue went up, and that's very uncommon to see. And that's very interesting. It's like something is boiling up, and now it's trading above the 200 something moving average with a golden cross on weekly candles. And I expect this stock to just jump up and go to all-time highs. I think it's very undervalued. For example, if we look at Google, what we talked about lately, and we look at the last 5 years, you can see that stock went up and revenue went up. That's normal. But with Baba, it's stock went down and revenue went up. So because there were many regulatory issues, there was government issues, there was the Evergrande crash, there were many problems with this business, and that's why it couldn't grow. But now they are advancing and investing in AI and cloud, and I think this stock has still a lot of potential. That's why I put it in the list of undervalued stocks in 2025. So I think this can also go up much higher. So the fourth company is in the semiconductor category, and I chose SMCI, Super Microcomputer Inc. I think it's a very undervalued stock, and they're working in a niche market, but there's a lot of demand for it. So what does Super Microcomputer do? They essentially are making servers for big companies like Google, Meta, Tesla, OpenAI to run their AI services. So they use cards from, for example, NVIDIA, Intel, and AMD to build these whole hardware systems, and they sell them to like Google, Microsoft, Meta, like these big companies that need all these servers to run their AI systems. So a lot of demand. They're selling the shovels in the gold rush, and I think this is a very interesting investment. If we look at the intrinsic value of SMCI and we fill in all the numbers, I think this is a very high growth business, and this can easily grow with 20-30% a year, which has done in the past. But let's say only 15% for the next 5 years, and then we halve it. We will find the value of $74, so undervalued by 34%. This is great, so it's undervalued. But its economic mode is more like a narrow mode because they have some competition from Dell, for example. And here we can see the strength and the weaknesses, like intense competition from larger players like Dell, HP, and Lenovo, who are also making these data centers. But they have a strong brand recognition, and they're very positioned well, and they are in the right business because AI is really the new thing, and it will stay for a long time, and the demand will increase over time. So I'm not too worried about that. If we look here at the charts, we can see that it's now trading at $49, and we can see that the trend has reversed in a bull trend, and an uptrend, and we can see that it's from all-time highs. It's still 60%, so I think we can go to at least like $70 this year, maybe 80, 90. But yeah, this stock has a lot of volatility, like you see, but also a lot of potential upside, and we can see massive swings to the upsides, and that's why this definitely deserves the list of the top 5 undervalued stocks, in my opinion. The last stock is a consumer staple stock, and it's a brand powerhouse, and you probably heard of it. For this sector, I choose PepsiCo. Why PepsiCo? PepsiCo is a massive company that sells over the whole world, and they are very diversified. They own many brands, Pepsi, but also like, for example, Lay's, Mountain Dew, Quaker, Gatorade, etc. So you've probably heard of all these products, and yeah, they sell over the whole world. And right now it's pretty cheap. So it's if we look at the PE ratio in the last 5 years, we can see it's one of the lowest at 19.89, and the price has declined, but the earnings per share are still pretty stable. If we look at the economic mode, we can see that it's a 7 out of 10. It's still a white mode company, which is great for long-term investors. And we're now looking at the monthly candle, so it's very zoomed out. So this is 2025, and we can go back all the way since it started. And it started in 1968, something like that, right? And it's interesting, we can look here at the RSI, the Relative Strength Index. And we can see it was oversold in 1974. It was oversold in 2009. And it's now oversold, even more than in 2009. So it's very rare. It's super oversold right now on monthly candles. And I think it will bounce back up. I think it's very defensive company. It might touch the 200 simple moving average here, but I think that the probability is higher that we just go directly up right now. And yeah, I think that's why I also choose for the defensive stock. This is the undervalued stock to go to, and the most safe option, I think. So these are my top 5 undervalued stocks for 2025. I choose these stocks based on fundamentals and based on valuation. And it's now July 12th, 2025. And these stocks are now trading at these prices. So it will be interesting to see how well they will do in 1 to 3 years. I hope you learned something. Let me know which stock you think is the most undervalued. Maybe I missed one, or let me know in the comments below. And feel free to like and subscribe. And I'll see you in the next video. Thanks for watching.